Good morning, good afternoon, and good evening, folks, depending on whatever time frame you guys are based in. I am based in London, so good afternoon from myself. My name is Naeem Aslam, and I work as a Chief Market Analyst. I will be conducting, as always, this masterclass in which we will be discussing how to trade stocks. Before we can continue any further, please do give me a sound check, and also if you can see my screen. So if both of them are okay, you can feel free to punch yes or no so that I just know that you guys can hear me well, and of course you guys can see my screen as well. All right, thank you so much. I can see everyone is saying all is okay. So a bit of a housekeeping in relation to our webinar, because we do these webinars every week on Wednesdays. If you have any questions, please feel free to ask them as we go along, because I really don't mind people asking me questions. I am here to help you guys, and you guys need to make sure that you get the best of your time. So just a quick a review of everything. Before we do that, I wanted to ask you guys your trading experience, because this helps me to understand and calibrate the level of the delivery accordingly. So how many of you have been trading under a year? So if you have been trading under a year, please say yes or say no. That will be also great as well. Right, okay, so I see people, there are many people over here who've been trading under a year, so that's fantastic. Okay, so that really helps me. And if you have been trading over 1 year, so you can also say yes or no, whatever suits you or whatever fits your profile. Okay, so we have a mix of crowd where we have people between with the intermediate to advanced sort of experience in the trading. So that is great. So we will continue on that basis then. As always, before we continue, it is important for me to go through this disclaimer. Anything which will be discussed cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, as always, if you'd like to contact us, our details are right in front of you. On Twitter, the handle is AvaTrade, and on YouTube, it is AvaTrade as well. On a daily basis, we post two different videos. One is your daily fundamental video, which we are doing in a live way every day, so give you an opportunity to ask me as many questions. And the second one is bit of a more technical analysis in relation to that. Now, as always, the most important thing in relation to agenda is sorry, I think I got cut off over there. Right, okay, so again, if you guys can hear me. So the agenda for today is what we will be doing is we'll be measuring indices, and then we'll be looking at sectors which are part of that. And then we'll be talking about some specific stocks. For example, in the streaming industry, we'll be looking at Netflix and Disney Plus. Airlines, we'll be looking at Boeing, Ryanair, and then a few other airlines within that. Pharma, we'll be looking at Johnson & Johnson and Pfizer. Online retailers, Amazon, eBay, Alibaba. In the energy space, I will be focusing on Chevron, Exxon Mobil, Shell, and Total. Banks, we'll be looking at Bank of America, Citi, Barclays, and Goldman Sachs. But more importantly, what we'll be doing is as always, the most important thing is to really look at the markets and then see what exactly is going on from a larger perspective, from a bigger perspective, because that is the most important one. So let me switch my screen and then bring the MT4 platform, which I am sure most of you guys are aware of how to download that or what to do with it. If you're not, then I'm sure you definitely need to, because MT4 is the most famous platform when it comes to traders, especially the retail traders, they do really use it more often. But of course, we have our own platform as well, and that is called AvaTrade Go, and we'll be going over that one very soon as well. So let me go through that platform first of all as well. So just to show you guys how to find that platform. So again, over here you go on the website, and then you can type AvaTrade Go, and that platform will really then you put in your login details. I'll be coming to that platform very shortly and then doing all of that. But first, what I really want to do is I want to discuss prices for the bigger indices and then see where exactly we are. We will form some sort of a base from there, and then once we have formed a base, then we will move our conversation further. Now, the chart that you see in front of you, this is the S&P 500 chart. This represents the top 500 companies over in the United States. What we're seeing over here really is a massive rally to the upside, because if you see it from 8th of May, the market has been putting higher lows, another higher low, pretty much the same, and then higher low, another higher low, and then at the same time we are also seeing higher highs as well, this being your high, another higher high. This was pretty much slightly above than this one, so it's still classified as a higher high, another higher high, and now the price has formed once again another higher high. So we can clearly say that the price has been trading to the upside. The trend hence is a bull trend, and it is a sharp, it's a strong bull trend that we are seeing. Now you may be wondering, what are these three different lines on the chart, on this chart? First of all, this is your 50-day simple moving average. In order to draw that, you go to insert, you go to indicators, and then you go to trend, and from here you get your moving average. From here onwards, what you do is, if you wanted to put your 50-day, so just like here, you change that to 50. You can change the color to pink, because I really like pink for a 50-day. And then if it is your 100-day, then I like orange, and then finally green for your 200-day simple moving averages. Now, the concept in relation to that is we measure two things. Number one is the price trading above all the three moving averages? If a yes, then that confirms us that yes, the bull trend is extremely strong. And second thing that we also look at the same time is how far the price is trading in relation to the moving average. Now you can see that 50-day simple moving average is trading in around 30,917, but the price is trading at 4,064, and it has gone too far too fast, just like how the price went here too far. So, and then after that we did see a retracement when the price retraced to all the way to its 100-day simple moving average. And again over here, when the price went too fast from a 50-day simple moving average, we did see a retracement, and over here we saw the repeat of that as well. And again over here we saw the repeat of the same thing, and now we are likely to see another retracement very soon as well. So this confirms us that yes, despite the fact that the price is trading in an upward trend, which means we should be looking for trades to the upside, but the immediate focus in the market could be for looking for a retracement, meaning prices can move to the downside. And if we focus on the RSI is also showing us that the prices are trading near 70. RSI is trading near 70, meaning a price is overbought, and we could expect a retracement very soon. So with that in mind, we may not want it to take bullish trades, long trades that much. We may be looking to go short on some of the markets, but the long-term trend is to the upside, so our major focus will be looking for the price to come into a better area of support. Now this is your US 30. This represents your industrial stocks mainly, and then this confirms as the sector rotation, because S&P 500 represents the overall market. That includes everything in that, and the US 30 on the other side includes industrial stocks. So this is more of a sector rotation where we're seeing that. So the tech stocks are not really part of that. And then what we see over here is that there has been a strong upward trend. Again, low over here, higher low, another higher low. Similarly, high, higher high, another higher high, another higher high, and finally this is where we are trading. So the momentum is clearly to the upside, but just like the S&P 500 index, the Dow Jones has also gone too far too fast in relation to its 50-day simple moving average. The RSI is also showing us that the prices have gone to a level where we could see a retracement because the RSI is trading near 70. Anything when it trades near 70 means the price it can be we can see a retracement, just like over here when the price was up, the RSI was up, and then after that we saw a retracement, and that's what happened with the price as well, and we could see it over here as well. So again, the concept is very similar. We would be looking for a retracement, we would be looking for short trades, but the long term trades would be, or they should be onto the upside. Now, one more before we continue any further, and that is your tech index. This is your Nasdaq index. This represents your tech sector. We know that the tech index, the Nasdaq, has been under pressure for the last number of weeks, or if not months, because traders have been selling tech stocks and then moving into industrial stock, into company like airlines, hotels, and other travel related stocks. Of course, we've seen movement in the energy and in the banking stocks as well, but tech stocks have been very much under pressure. Now, with respect to that, the price is trading above the 50-day simple moving average, but it hasn't gone too far that much. So that means we may not see that much of a retracement. Similarly, when we see it over here with respect to the RSI, we also see that yes, the RSI hasn't reached that level as well. So it means the Nasdaq or the tech stocks can actually see more momentum to the upside. And moreover, because the price is trading above all the three important moving averages, our major trend is to the upside. So this is what we called a measuring indices and performing sort of a sector on a high level sector analysis. So how you guys are feeling so far in relation to that? Guys, I just got a one person saying that he couldn't really hear. I just wanted to make sure that everyone can hear me and then they can see my screen. So maybe that just one particular person had that issue. Okay, okay. So everyone is saying it's pretty clear. All right. So tell me, what is the overall trend in the market now? Are we looking for a long trades or are we looking for short trades in this particular market? And once you guys will answer that, then we will go and then start looking at stocks. Okay, so everyone is saying that we're looking for long trades because the overall trend has been to the upside. Absolutely correct. We are looking for long trades. Now, let's focus on the banking stocks to begin with. So let's focus on Bank of America. Now, look how beautiful Bank of America trade has been. Now, first of all, again, the same concept goes over here. The price has been trading very much to the upside, but because of the S&P 500 index, because of everything else, we are looking for a short-term trade, which we can say that yes, the price we need the price retracing to the downside. So the Bank of America has entered into this nice area of resistance, and it also formed a double top, sort of a double top, you can say that. And this could be a really great area where you could trigger a short trade in the short term. Of course, the long-term trade we wanted to do is we wanted to trade in the direction of this trend, because the direction of the trend is to the upside, and that's what we want to do. So it also means that we need to redefine and retune our support zone slightly bit more, so we can move this one to over here, just right over here, because this is where the double sort of bottom was formed. So if the price comes between 36 to 37, we can change, we can really look for that opportunity. So we really have two different options right now. I'm just changing the color of this red to green, because I believe the support zone should be in green, because it makes it easier for us when we look at the chart. And at the same time, I'm also going to draw another support zone, which is near this 50-day simple moving average, and that is going to be between 34 to 35. So this is much better area of support, but this is also a good area of support as well. We could look at both of them at the same time, but as we know that the prices are likely to retrace, so we could, well, we should be, or we could be looking at to short this particular market. And then because the double top has formed, the price has entered into resistance. So the technical analysis is really indicating to us that we should go short, or either we could be waiting for the price to come into this area of support to go in terms of the long-term trend. Now, as for Goldman Sachs, when it comes to Goldman Sachs, again, the price has been retracing massively since it touched its resistance zone, which is right over here. So again, because this is a resistance zone, so we will have to change the color of our resistance zone lines to red. And by doing that, I'm just going to quickly go here and change it to red. I'll do the same with this one. Go over here, change the color to red. Now, as you can see from the Goldman Sachs chart, that the trend is very much to the upside. We have a low, we have a higher low, we have a higher low. Now price is forming a new higher low. So Goldman Sachs, on the other hand, is coming into this important area of support. So we could potentially look at price, despite the fact that everything else is, we are looking for S&P 500 is overbought, and we could see a retracement in that. So if what we could see is we're gonna keep an eye in relation to Goldman Sachs with what it is going to do with its 50-day simple moving average. And that 50-day simple moving average is very much in line with our support zone. So basically, this is what we're going to do. We're going to keep an eye on the S&P 500 index overall. If the index shows more strength, then we could potentially take this long trade, because this one has entered into this area of support. Otherwise, we would prefer this one to continue to move to the downside and then come where its 200-day simple, where its 100-day simple moving average is trading at. So really wait for the price to come into this area of support between 281 to 286, or we could try the price right over here where it is trading at. So once again, with respect to Goldman Sachs, it is already showing us a lot of weakness in relation to Bank of America. Bank of America is a superior trade because it is in line with our overall market sentiment, meaning we could take that short trade if S&P really starts to move lower. But Goldman Sachs, on the other side, is very opposite. It says that if market doesn't show weakness, then Goldman Sachs has a much bigger room to move to the upside. Now, as for Amazon, which is part of your tech stock, where we've seen that, okay, the prices have started to move higher. So really the price came into this area of support and then formed that double bottom, and then now the price is breaking out of that. So potentially, if you haven't been able to grab this particular price level, you can grab the price right now where it is trading and put your stop loss below the 200-day simple moving average and target this particular area of resistance and see how far it can really go from here. overall, with respect to Amazon, we have this sideways trend with sideways pattern very much forming, but the big trend, which is your higher low, went into consolidation. This consolidation itself has a two different parts, this being low, this being high. Now you'll be entering your trade in the middle of that trend based on the fundamentals that the Nasdaq is likely to move to the upside. So we could take this trade possibly and then place our stop loss below the 200-day simple moving average, just to make sure that if we are wrong, we are not losing too much. Now, in terms of your risk to reward ratio, you are only risking this much, and in terms of your profit, you are really looking all the way to here. So we have more than 4-to-1 price to, in terms of a risk to reward ratio. Trade in that particular term certainly makes a lot of sense for us. So, and also it is in line with what is going on with the bigger time frame. Now, after this one, we're going to move on to the next particular price action, and for that we're going to move to Netflix and see what exactly is going on with Netflix. Again, on the daily time frame, we are seeing that the prices are moving back above these three important moving averages. The price hasn't been able to come and visit this area of support, which we mentioned long time ago. And in terms of a resistance, the price hasn't gone into the area of resistance as well, which was right on the top of this particular chart over here. So, but let me just change this one into red. So when I look at Netflix, I really don't really see much of an opportunity in relation to Netflix because the price is trading in the middle of the range, but that was the situation with Amazon as well. So what we could do potentially over here is once again put our stop loss just below the 50 simple moving average, so which is about 500. So if that stop loss can really work, if the stop loss remains over there, and if you're going to keep that stop loss there, then we could potentially look for the price to move to the upside. But remember, those circumstances, your risk to reward ratio isn't that great. Why I am saying that? The reason that I am saying that is because you are risking from here to here. So this is your one, and then in addition to that, if we look on the top, we have this much. So we just literally are making 2-to-1 risk to reward ratio, which is not too bad, and we can certainly take that. But and because the Nasdaq is trading to the upside, so we could really take that trade. So it's not really that bad trade in terms of a risk reward ratio, but the chances of success aren't that great. So it's not very much ranked quite high on from that perspective as well. So Netflix on overall isn't really presenting as a great opportunity like Amazon did earlier. Now we will move into the airline sector. And before we do that, we will quickly have a Google stock as well. So Google's Alphabet is certainly moving to the upside. Last few days we have seen a big momentum in Google because of this big Oracle news that came out earlier. So really, there's no big opportunity. So we have to wait for Google price to really come into this area of support. Could be happening in a few weeks' time when the earnings will begin, when we will start to see earnings. So we have to wait for that. But in terms of a resistance, the price could find its resistance somewhere near 2,268. So that could be the area of resistance. Now we will change our support zone into green, because just to make things a bit more tandem, to keep them in the same line as everything else is. So again, we are looking for a trade to the upside when it comes to Google, but right now there's not really any opportunity with that, because we want the price to come over here. So we will have to wait and see. Now with respect to Boeing, again, the trend is have a low, higher low, we have a higher low, another higher low, the price is moving to the upside. Now, this is very much your travel industry related stock. So what we will, in an ideal situation, what we really like to see is price coming slightly over here. So just a little bit more of a retracement. This is where we would really like to see the price to come, and then we can entertain that. Because right now, the price has gone already too far from relation to 50 days average, and we don't really want it to trade that because the risk to reward ratio doesn't really make sense. Why? Because if we are going to trade that, we have to put our stop loss below the previous low. So it's going to be 231. So we have from here to here this big stop, and then in terms of our reward, we would be, looking at 289. The price may not go over there. The price may actually start to see some sell-off coming, some selling pressure coming right at 269. So really, for me, in Johnson and Johnson, there is literally no sense to take that particular trade to the upside. So really, the option here is to wait for the right movement, because as I said, in a 2 weeks time, we are, starting from next week, in fact, we are going to hear the earnings season kicking in, and we should see plenty of opportunities really coming from that side. Now I'll do Johnson and Johnson. Now, with respect to Johnson & Johnson, the opportunity is certainly, on our doorstep. Why? Because the price at 50-day simple moving average, we do have that upward trend as well, which you may want to ask how that upward trend. So we have a low, we have a higher low, we have a higher low, price forming high. I know this one wasn't high, but then we had a high, and then now price is kind of going to the downside, but overall trend is to the downside. And so really we'll be targeting Johnson & Johnson to go to the upside. And in terms of a resistance, I would be very much looking at the 173. The company will be announcing its results, and then how the coronavirus vaccine has impacted its, all of its earnings and stuff. So this would be my first area of support. In terms of a risk to reward, what I would be really doing is, this is my initial risk, and I'll be looking for this much of a reward on the upside. And if this doesn't really work, then we would looking at our next area of support, which is going to be just near that 200-day simple moving average, and that is going to be just over here. So be 156 to 157. In this case, this is a much better area of support, and but this is also a good area of support. The pharmaceutical sectors are doing still quite well, and given the fact that we are going to hear a lot of results, so that would be quite intriguing to keep an eye on. As for Neo, okay, Emmanuel, Neo, we don't have Neo on our platform, so I'm afraid I can't really cover what we don't have on our platform. I'm going to focus mainly on the stocks which we have on our platform. So does this make sense to you guys, what we have done so far in relation to various different stocks and the moves that we have done, which one to look for and then what to do with them? I will quickly do Twitter stock as well, because Twitter is also going to see some really crazy earnings as well, because now Donald Trump is not there anymore. So right now, Twitter is very much in battle with its 200-day simple moving average. The trend, the downward trend changed when the price broke from its this downward trend line. So, and then the price also moved above the 50-day simple moving average. So really the momentum over here could be that we could be looking for a trade to the upside only when the price crosses above the 200-day simple moving average. In terms of our resistance, we should be looking at somewhere around here, $75 price level. So that should be our sort of a resistance that we'll be looking at, 75 to 74. And in terms of our buy zone, we wanted to have one line over here and then the other line just over here, but only if we will start taking this trade if the price breaks above the 50-day simple moving average. Of course, if that doesn't happen, then we'll have to wait for the price to come towards its 100-day simple moving average perhaps, and that would be also when the price would be testing the this trend line as a support zone as well. Now, because these are support zones, so you know what to do. We will change them into green, so that we can, let me quickly do that, and then I will give you guys chance to ask me questions. In fact, you guys can start asking me questions. You can start putting your questions there if you have any, and I will go through them once we have changed these ones into our support zone. So if you have any questions, if you are unsure about anything that we have discussed in this so far in this one, it would be really, now would be the chance for you guys to really ask me those sort of questions. Otherwise, you guys can always come in our daily sort of videos that we do. So let me have a quick look at questions. Gold seems crazy. How high, right? Yes, gold is certainly crazy. Gold formed a double bottom as we predicted in our technical analysis video. So again, I recommend you to go to our YouTube channel to have a look on that, because that will really give you further idea and clues about that. All right, so folks, with that said, I will see you guys same place, same time next week on with a different topic, and we'll continue. So overall, the trend is to the upside. We are looking for retracements. Any catalyst can happen in the market, and we'll have more conversations on our YouTube channel. Thank you.